Hi, my name is Steve Parr and I'm a Vancouver business lawyer, and today we're going to talk about holding companies, what they are, and why you might benefit from having one of them in your small business structure. So a holding company is a little bit different than your typical operating company. So in a holding company, it's not selling anything, it's not taking in revenue, it doesn't have expenses or payroll. It's not really a business in that sense of the word. Instead, what a holding company does is that it holds assets. So it holds assets for tax reasons and for liability reasons, and we're going to get into all of that in just a minute. So typical assets of a holding company are other companies. So a holding company may hold one or multiple different operating companies, or it may hold real estate assets, or it might even hold an investment portfolio. There are four main reasons why you might want to consider using a holding company in your small business structure. Let's go over each of those right now. So number one, asset protection. Number two, maintaining your eligibility for the lifetime capital gains exemption. Number three, for use as an investment vehicle. And number four, the timing of dividend payments out of your company. So that's a lot. So we're going to break it down one by one. So at the top, let's go to asset protection. So number one, a holding company is a very effective strategy for protecting the earnings from your operating company. So typically this is how a structure would look like if you just have one shareholder and their operating company. So let's take Tim, the small business owner. Tim owns a t-shirt company and he is the sole shareholder of his operating company, Tim's T-shirts. Tim's T-shirts had a great year. They made $1 million, and Tim is trying to figure out what to do with that cash. He could leave it in the corporate bank account, or he could pull it all out into his personal account and do whatever he likes with it, whether it's personal expenses or if it's making his own investments. So the drawback of pulling it all out is, of course, taxes. He's going to lose about half of that income is going to go straight to taxes. So whereas if he leaves it in the corporate bank account, he's going to be subject to the corporate tax rate, and it's going to be a lot lower, a lot better for Tim. But the problem with leaving all that cash in the operating account is that Tim's T-shirts has relationships with customers, with suppliers, with the landlord where they're renting their facility to produce the T-shirts. So there's all kinds of relationships that center around that operating company. And if something goes wrong with one of those relationships, his cash, which is kept in the corporate bank account, could be exposed to a lawsuit. So far better off for Tim to set up a holding company at this point, where Tim would be the owner, the sole owner of the holding company. The holding company in turn is going to be the owner of the operating company, and the operating company will dividend out, tax-free, all of the cash that it doesn't need for its ongoing day-to-day operations to the holding company. And that cash will sit there until Tim decides that he needs to pull it out for himself, or if he wants to use it for investments or other purposes. So let's turn now to the second reason for maintaining a holding company, and that's making use of the lifetime capital gains exemption. So every Canadian is entitled to $880,000 of a lifetime capital gains exemption on the sale of qualifying small business shares. So the important part is making sure that your shares in your company maintain those qualifications so they can be called qualified small business shares. And there are a number of important steps that need to be taken in order to make that happen, and you can discuss those with your accountant. But one of them is to make sure that there's not any excess cash in your operating company. So your operating company needs to meet a certain threshold of how much cash can be actively used in the business. 90% of the assets of your operating company need to be actively employed in the business. Otherwise, the shares in that company will not qualify for the lifetime capital gains exemption. So this is a very important thing to keep in mind. And if your business is throwing off a lot of cash, is generating a lot of cash, then it's essential that you set up a holding company. Now let's turn to the third reason for using a holding company is it can be used as an investment vehicle. So rather than keeping all that cash in the operating company or pulling it out onto the personal side and then making investments from the personal side and being subject to those heavy personal taxes, a holding company allows you to get the best of both worlds. So the cash comes out of the operating company into the holding company, and then from there, it's taxed on the corporate rate and can be used for investment portfolios, for purchasing real estate, and for purchasing shares in other companies. Now let's turn to the fourth reason why a holding company could be beneficial for you. So if your operating company, Tim's T-shirts in this case, has 3 shareholders, say, so Bob, Tim, Julia. So if Bob, Tim, and Julia each have a share in the company, they all have different financial needs, and they're gonna wanna take payments or dividends out of the company at different times. But if they all own the same set of shares, the same class of shares, then when a dividend is issued by the company, everybody has to receive a dividend at the same time. And this might not be tax beneficial, because if there's $100,000 of dividends to go out, and so $33,000 approximately goes out to each of those shareholders, then that might not produce a favorable tax result on the personal side. So if each of those shareholders sets up a holding company in place, then timing is not really an issue, because the cash will get taxed on the corporate side in the operating company, or it will get taxed on the holding company side. It doesn't really matter where the cash sits. So a holding company can be really useful if you have an operating company that has multiple shareholders, and each of those shareholders needs to get the cash through dividends at different times. So there are 4 reasons why a holding company can be beneficial for your small business structure. This is complex stuff, and if you have any questions, I strongly encourage you to talk to your accountant or reach out to me directly. I'm happy to respond to your questions. Thanks for watching.